Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. Today is June 19, 2021. This is the end of week number 24, and I'm going to go and cover my weekly trading summary, whether or not I made money or lost money this week. But before you do, I want to get into something really interesting. I'm going to go over one article here. This is the S&P 500 price forecast, and it has this little commentary here, but I'm going to show you this video here. This video is created by FX Empire, so let me just play you a little snip of this.
From FX Empire, this is Chris taking a look at the S&P 500, and as you can see, the S&P 500 has pulled back towards the 50-day EMA. Really, at this point, I don't think that there's a lot to worry about here. This is a market that has clearly shown its proclivity to find buyers on dips, and I just don't know how that changes anytime soon. So, with that in mind, I like the idea of simply waiting for support, maybe even down at 4,000 if we do really sell off. I'm a buyer. A break of the highs, of course, sends us back towards 43 and then 4,400.
So now that you saw the video, here's his write-up. This is by Christopher Lewis, and you'll see he talks about Friday's event, and then what he gets into is, let's break down if it goes past the 50-day moving average. Then he's thinking that will a downtrend start happening, and that's what he was worried about. But most people still think the market actually has a lot of room to actually move up, and he's not the only person who thinks this. There's a lot of people who believe that S&P, if it reverses trend, will most likely march towards 4,300 and 44 next. So why does this matter from my point of view? I'm a big fan of, you can use charts and look at it, but I still don't use that as a one way of how I decide which way the markets will do. I am a little bit longer term trader, so I don't care about short term movement. I don't care about 1 day movement, 5 minute movement, 3 day movement. The Dow has been down 5 days in a row. The S&P has been down 5 days in a row. How do I make money on that? My investment strategy using iron condors doesn't require me to know if the market is going up or down. In fact, I always tell people I don't have to be nearly as smart as everybody else in the room. They can be 2 or 3 or 5 times smarter than me, and I'm okay with that. What I do is I play the opposite strategy. I play where it's not going to go, and I have plenty of room to adjust my trades to make money regardless of what happens. So if the market is downtrending for the next week or so, I should be fine. If it rebounds and goes back up, I should be fine. I'll make money in either direction. So with that being said, let's jump into my ETrade account. But before we do, if you're on Facebook, join Investment Group 102, where we talk about different things from options, real estate, stocks, credit card hacking, and other things like that, all finance related, investment related. You want to level up your thinking, join this group. So let's go into ETrades. I'm going to go into my transaction history, copy everything. I may try a different pattern now to be a little bit faster. I'll copy everything, and then I'll paste it into the Excel, and then I'll reorder the dates. So I copied them all, and now I'm going to paste it down here. I'm going to give myself some room so I have room to adjust it. And I'm going to delete all those useless lines, all the adjustment lines. I'm going to copy all these, and then I'm going to paste it over here. And then now I'm going to just resort them. So this is what it looks like after I resort everything, put in the dates, plug in all the formulas, making sure the options is right, the ticker is right, what strategy I was using, the actual event that happened, the description, the money, and then I plug in these things here. Actually, I should color these so in the future we know that these are my headers. And this is the trade. So here it is, and then like I said, I'm getting more detailed in the way I document, so you can see when I'm opening, when I'm closing, when I'm rolling closer for the premium. You see that there's 22 days left on this, and I'm still rolling to get a little bit more premium. Now, this may come back to bite me. I didn't expect the market to drop 500 points. I was hoping that the markets will sort of flatten out, but I'll see what I'll do next week. So let's see what happens. Let's pivot this. We do this every week. Save it, go to the top. We're going to hit the pivot, refresh, and let's see if this is right. I can tell if it's right by looking at the raw data. And I don't see anything wrong. Let's hit the refresh over here. And let me just double check something real quick. This goes over here. This number goes over here. And let me just double check the numbers. Let me hit the save button. I think it's right because it only jumped up $100 and something, which is about right. That looks right to me. So I bring in all the values. Everything looks good. Here's the final numbers for week number 24. I only did 24 trades. Brings my total trade volume for the year to 675. My running P&L total is now 21,000. But you see my average is starting to drop. Not only that, my total forecasted total trades for the end of the year at this point, at this rate, will probably bring me to 1,400 trades a year. So let's talk about some of the trades that I did this week. We'll start off with energy transfer. What you'll see here in this week, because energy transfer on this particular day, on the 15th, energy transfer was trading over $11. What it ended up doing is it cost me money to move my cover call $1 up. And in order for me to do that, I offset it by rolling my cash secure put also $1 up. So I moved it from an $8 cash secure put to a $9 cash secure put, which brought me $18 to offset the cost of this one. Now, I did not know energy transfer was going to drop back down. So what I ended up doing also a few days later on the 17th, you see what I did was I initiated a new cover call because I did something like a buy right. And here you see the price that I bought. I paid $11.20. I still believe energy transfer may have more room to run. I think it can go up to 14, 15 bucks eventually. Again, these are slow moving businesses with a high dividend yield. I'm not really playing these to like triple your money, but really for the, I was trying to play it for the dividend and also playing it for the option pricing. But my cost basis on my first 100 shares was under $8. So from 8 to 11 was a quick run, and I didn't expect to make that much off of that. So that's why I was willing to pay some money in the premiums to just increase my strike price so I don't cap my upside. And if I still believe there's more upside left, it makes sense for me to use $11 and $12 and $13 strike prices on the cover call side. So that's what I'm doing there. On to the next trade. So let's talk about Fastly. Let's talk about 1 week first. Here you'll see I rolled this up and out, collected $58. And recently I did add another 100 shares because Fastly has dropped down. And I'll show you what I mean. If you scroll up here, look at the cost of rolling this one. I collected $23. If you look at this one, oh, that's a buy right, so that's a little bit different. But if you look at this one, I collected another 38. And if you look at this one, so you can see that I did a buy right. So let me show you what this means. If you look at the option pricing, if you add 1 week, it's $58. Add another week, then I made 82. Add another week, I made 246. And if you keep on scrolling this way, you see it. It's growing and growing and growing. Every week I'm making money on this rolling. And here you go. On this week, I did it multiple times. I'm up to $377. Then on this week, I'm up to $400. If you scroll up here, I'm up to $485. And look how long I've been playing Fastly. So there's a reason why I'm adding using cover call. So I'll show you what I mean real quick. By changing the filter, I want to bring this one in. This is not an option. I bought another 100 shares at $46. You see, I was playing this when this thing was in the 60s and 70s for Fastly. As the share dropped, I took some of my profit that I made, and you saw I made a couple $100. I decided to spend $4,600, create another option, so now I can do 2 options, with the hopes that eventually Fastly will move back up, which it is doing. So you see this 100 shares of Fastly is moving back up, and that's why I'm rolling this up and out because what I'm trying to do is offset the original factory that I bought, and I probably paid 77 for the other one. So the whole strategy here is I average down on the 100 shares, write more options. Hopefully I'm right. I can, not to say I can predict it, but I'm just trying to play this back up. If Fastly just sort of goes up slowly from here on out to like, let's say $90 over like, let's say 2 years. I'm not saying it's going to pop up next week, but if it moves up slowly, there's enough IV and enough premium for me to make money on options plus on the underlying shares, where this trade here would have made me enough profit to offset what I paid for the first 100 shares, because I did pay a way more for that. So that's sort of the thinking behind this trade. And on to the last piece, which is the S&P 500 or SPY Iron Condors. Look at all these trades. And in the end, it says I did not make a single dollar from SPYs. And that is a true statement, and I'll show you why. Even though I'm collecting premium on all of these, those I won't know if I make money or not. But there was one trade in here that was a really horrible trade for me. And it was this one here. You see this? It cost me $1,200 to close. There was one of my Iron Condors, even with 29 days left. Look at the price. This one was a really bad one, because actually it was so close to being tested, because I believe it hit 425 on a Wednesday or a I'm sorry, if you back up 5 days ago, maybe last Friday, I think it was a 425. So this was almost being tested, and then the last 4 or 5 days it went in my direction. But instead of waiting for the market to sort of play itself out, I ended up saying, hey, I'm willing to take the loss on this one, and then I'll just reopen a new one. So I did lose money on this. So this is why I did all those moves. All those other ones may have made money because they're not being tested. This is the one that had the biggest risk. It was a 426. All these other ones are in the 430s, 435s, 440s. So you'll see that a lot of these calls. So the best way to look at it, I'm going to use a filtering. Okay, I added the call filtering, and you see the 426 was the only one that I had that was closest to where the market price is. All these other calls, the next closest one's a 433, 436. Oh, this is a put. You see this? This is wrong. This filtering did not work because, hang on one second, let me fix that. Okay, so you can see my point. There was only one of them that was really a bad one. So I'd rather spend money to fix it, because what that means is all the other ones should be fine. They should still make me money. They're far enough away. None of them are in the 420s anymore. Most of them are in the 430s and even 440s. So that will be fine. Now let's look at the put side. And here you go. Most of my puts, none of them are in the 400s. And even if you see me rolling it up, I'm still rolling it up to like a 398 is really the closest one. Now I did that before the big drop. And again, this one has 22 days left. So I may end up keeping an eye on this one. So these that I'm rolling, now these have a little bit more time. So this is how I can see what's going on using Excel, and I can filter stuff. So let's go back to the summary. This week was a small profit week. Very small. You can see that. Barely made 100 and change. But what I did was I adjusted some of my bad positions. I took the hit there, took a loss, but I'm readjusting some of my other positions. So I'm trying to reduce some risk. So that's really the strategy. Sometimes you can take the profit from one trade or 10 trades and then suck it up and sort of adjust a bad trade. So does that mean the trade went good? No, it doesn't mean that trade went well. But my goal is to, when you're readjusting it, you will, over time, right? The goal is you want to make sure you win more than you lose. And over time, even if I'm only made $100 this week, what that would mean is at least at the end of the year, if I can show that, hey, I consistently manage my portfolio, over time, I'm going to always have more up weeks and down weeks. And that when you do this right, you're going to make profit over the long period. I never claim that you're going to win 96% of the time, and if you do, you're probably not going to make a lot. So you have to find that right balance between the win-loss and also how you adjust your portfolio and how you adjust for the risk. So right now, I think I'm in a pretty decent position. If the markets go back up, I'll be fine. If it drops another 5%. I think I'll be okay. I mean, obviously, I'm going to lose some in the short term because I'm going to start doing the same thing. I'm going to close some positions out, start adjusting it. That's what I'm always doing. So let me know how you're doing. Comment below. Let me know if this is helping you. If you need some help, let me know. Find me on Facebook, Investing 102. Don't forget, let's do this together. Let's do this $1 at a time. And as always, have a profitable day. Bye bye.